Look, I need you to understand something that most people won't tell you. We're not just heading into another market correction. We're staring down the barrel of something that happens maybe once or twice in a lifetime, and the clock is ticking faster than anyone wants to admit. Right now, as I'm recording this, there are signals flashing across every major market that should have your full attention. Not next month, not next week, right now. Because what's about to unfold has been building for years, and we're finally at the breaking point. Let me paint you a picture of what's happening behind the scenes. The Federal Reserve just made a move that sent shockwaves through the precious metals market. They're trapped. Absolutely trapped. They've got inflation running hotter than they're willing to admit publicly, and they're stuck between two impossible choices. Keep rates high and watch the economy crumble, or cut rates and watch your purchasing power evaporate. But here's what's really interesting. While the Fed is playing this dangerous game, central banks around the world are doing something they haven't done in decades. They're buying gold at a pace that's absolutely unprecedented. We're talking about hundreds of tons per quarter. The People's Bank of China, the Reserve Bank of India, the Central Bank of Turkey, they're all loading up. And they're not doing it because they think it's a nice hedge. They're doing it because they know something. Think about this for a second. These are the institutions that have access to data you and I will never see. They've got teams of economists, analysts, strategists working around the clock. And their unanimous decision is to convert their dollar reserves into physical gold. That should tell you everything you need to know about where they think this is headed. Now, I want to take you back to a moment in history that most people have forgotten. It was August 1971. President Nixon walked into the Oval Office and made a decision that changed everything. He closed the gold window, ended the Bretton Woods system, told the world that dollars would no longer be redeemable for gold. And you know what happened next? Within a decade, gold went from $35 an ounce to over $800. That's not a typo, a 2,200% increase. But here's the part that keeps me up at night. The conditions we're facing right now are worse, much worse. Back then, the national debt was manageable. The dollar was still respected. We weren't running trillion-dollar deficits every single year. We weren't printing money at a pace that would make a banana republic blush. Fast forward to today. We've got a debt that's pushing $36 trillion. That's trillion with a T. The interest payments alone are now exceeding our defense budget. Let that sink in. We're spending more money just servicing our debt than we are on our entire military. And it's accelerating. Here's where it gets really interesting. The bond market is starting to crack. You've probably heard about the yield curve, how it inverts before recessions. Well, it's been inverted for months now. But what you might not know is what's happening in the long end of the curve. The 30-year Treasury yield has been climbing even as the Fed talks about cutting rates. That's not supposed to happen. That's the market telling you that investors are losing confidence in long-term dollar stability. And when bond investors lose confidence, they don't just sit there and take losses. They move their money. And where does that money go? Into real assets. Into things that can't be printed. Into gold and silver. Now let me tell you about something that's happening right now in the silver market that almost nobody is talking about. There's a supply deficit that's been building for 3 consecutive years. We're mining less silver than we're consuming, and it's not even close. The deficit is running at over 200 million ounces annually. That's physical metal that's being consumed by industry, by solar panels, by electronics, by electric vehicles, and it's not being replaced. You know what happens when you have a supply deficit in any market? Eventually you run out. And when you run out of a critical industrial metal that's also a monetary metal, the price doesn't just go up. It explodes. I was talking to a dealer last week who told me something that should concern everyone. He said the premiums on physical silver are the highest he's seen in his 30-year career, not the spot price. The premiums. That's the difference between what silver trades for on paper and what you actually have to pay to get physical metal in your hands. And that spread is widening every single day. That tells you there's a disconnect happening. The paper market, where most of the trading happens, is saying one thing. But the physical market, where real metal changes hands, is saying something completely different. It's saying there's not enough to go around. Here's something else that should grab your attention. The COMEX, that's the exchange where silver futures trade, they're sitting on inventories that are at multi-year lows. We're talking about levels we haven't seen since the last major price spike. And every time inventories get this low, something breaks. The market can't handle the stress. And when it breaks, prices gap up violently. But let's talk about what this means for you personally. Because this isn't just about charts and data points. This is about your wealth, your retirement, your ability to maintain your standard of living. If you're sitting on cash right now, You're losing purchasing power every single day. The official inflation numbers say 3 or 4%. But you know that's not reality. You see it at the grocery store. You see it at the gas pump. You see it in your insurance premiums. Real inflation is running much higher than what they're telling you. And here's the thing about inflation. It's a hidden tax. It's the government's way of reducing the real value of their debt by destroying the value of your savings. Every dollar you have in the bank is worth less today than it was yesterday, and it'll be worth even less tomorrow. Now, I know what some of you are thinking. You're thinking the stock market will protect you. You've got your 401k, your IRA, maybe some individual stocks. And sure, stocks have been going up. But let me ask you something. Have you looked at what stocks are doing when you measure them in gold instead of dollars? Because that's the real test. That's how you know if you're actually building wealth or just keeping pace with currency debasement. The S&P 500 in gold terms has been going sideways for years. All those gains you think you're making? They're mostly just compensating for the loss of purchasing power in the dollar. You're running on a treadmill, working harder and harder just to stay in the same place. And here's what really concerns me. We're at a point in the market cycle where everything is priced for perfection. Stocks are expensive by almost every historical metric. Bonds are offering negative real yields after inflation. Real estate is stretched in most markets. Where's the safety? Where's the value? That's why smart money is moving into precious metals. Not as a speculation, not as a trade, as insurance, as a way to preserve wealth through what's coming. Let me tell you about something that happened during the last financial crisis. Back in 2008, when everything was falling apart, there was a brief moment where even gold got hit. People were selling everything to raise cash, to meet margin calls. Gold dropped from over $1,000 down to $700 in a matter of weeks. And you know what the smart money did? They backed up the truck. They bought everything they could get their hands on. Because they understood that the response to the crisis, all that money printing, all that quantitative easing, would eventually send gold to new all-time highs. And they were right. Within 3 years, gold was at $1,900. We're facing a similar setup right now. Except this time, the crisis is going to be bigger. The response is going to be more extreme. And the move in precious metals is going to be more dramatic. Here's something you need to understand about how gold and silver move. They don't go up in a straight line. They consolidate for long periods, building energy while everyone loses interest. And then they explode higher in moves that catch everyone off guard. We saw it in the 70s. We saw it in the 2000s. And we're about to see it again. The technical setup right now is absolutely textbook. Gold just broke out to new all-time highs. That's significant because it's happening while the dollar is still relatively strong. Usually gold rallies when the dollar is weak. But this time it's rallying despite dollar strength. That tells you the demand is overwhelming. It tells you this move has legs. Silver is even more interesting. It's been coiling in a massive base pattern for years. Every time it tries to break out, it gets smashed back down. But each time it bounces, the lows get higher. That's called the ascending triangle in technical analysis. And when those patterns finally break out, the moves are explosive. But here's what you really need to understand. This isn't just about making money. This is about not losing everything you've worked for, because what's coming is going to wipe out a lot of wealth. Wealth that people thought was safe. Wealth that people thought was diversified. The pension funds that are underfunded by trillions of dollars. The insurance companies that are loaded up with bonds that are underwater. The banks that are sitting on unrealized losses that dwarf their capital. All of that is going to come to a head. And when it does, the government's response is going to be the same as it always is. Print more money, bail out the system, and destroy the currency in the process. You know what's really telling? The people who are closest to the money, the ones who understand the system best, they're the ones buying gold. Central bankers, hedge fund managers, family offices. They're not buying because they're worried about missing out on gains. They're buying because they're worried about catastrophic losses everywhere else. I want you to think about your retirement for a second. If you've got money in a traditional IRA or 401k, it's probably sitting in a mix of stocks and bonds. And right now, both of those asset classes are vulnerable. Stocks are expensive, bonds are paying negative real yields. What happens to your retirement when both of those get hit at the same time? Because that's exactly what happens in a stagflationary environment. Stocks go down because earnings collapse. Bonds go down because inflation expectations rise. And your nest egg gets crushed from both sides. There's a way to protect against that. You can hold physical gold inside a retirement account. It's called a gold IRA. Same tax advantages as a regular IRA, but instead of paper assets, you're holding actual metal. I put together a guide that walks through exactly how it works, how to set one up, what the rules are. It's in the description if you want to check it out. Especially relevant if you're sitting on 6 figures or more in retirement accounts. But let me get back to what's happening in the markets right now, because the signals are getting louder by the day. The dollar index has been strong, but that strength is masking some serious problems underneath. When you look at what's happening in currency markets around the world, you see countries actively trying to reduce their dependence on the dollar. The BRICS nations are working on alternative payment systems. Saudi Arabia is accepting yuan for oil. The world is slowly, methodically moving away from dollar dominance. And here's the thing about reserve currency status. It doesn't end gradually. It ends suddenly. One day you're the world's reserve currency, and the next day you're not. And when that happens, all those dollars that are held overseas, all those trillions sitting in foreign central banks and sovereign wealth funds, they come flooding back home. And that creates inflation on a scale that's hard to even comprehend. We're not there yet. But we're closer than most people realize, and the smart money is positioning for it now, before it becomes obvious to everyone else. Let me tell you about what's happening in the mining sector. Gold and silver miners are some of the most hated stocks in the market right now. Nobody wants to own them. They've underperformed for years. But here's what's interesting. Their costs are relatively stable, but the price of what they're producing is going up. That means their profit margins are expanding dramatically. And when gold and silver really start to move, these companies are going to generate cash flow that's almost unimaginable. I'm not saying you should go out and buy a bunch of mining stocks. That's not my point. My point is that even the companies that produce gold and silver are undervalued right now, which tells you that the metals themselves are even more undervalued. Think about this. Gold is at all-time highs in dollar terms, but when you adjust for real inflation, when you look at what gold should be worth based on the money supply, based on debt levels, based on historical ratios, it's not even close to its real all-time high. In inflation-adjusted terms, gold would need to be well over $3,000 an ounce just to match where it was in 1980. And the fundamentals now are far more bullish than they were back then. Silver is even more extreme. In 1980, silver briefly touched $50 an ounce. Adjusted for inflation, that's over $150 in today's money. And silver is trading at what, $30? The upside potential is staggering. But here's what you need to understand. This isn't about trying to time the perfect entry point. This isn't about waiting for a pullback. Because in markets like this, the pullbacks don't come. Or when they do, they're shallow and brief. The market just grinds higher, leaving people on the sidelines waiting for a better price that never materializes. I've seen this movie before. I watched people wait for gold to pull back when it was at $800. They were sure it was too high. They were sure it would come back down. And then it went to $1,900. And they never got their pullback. The same thing is happening right now. People are waiting for a correction. They're waiting for a better entry. And while they're waiting, the market is leaving them behind. Here's something else that's happening that you need to be aware of. The derivatives market for precious metals is absolutely massive. We're talking about hundreds of billions of dollars in paper contracts that represent gold and silver that doesn't actually exist. It's all leverage. It's all speculation. And it's all built on the assumption that nobody will actually demand physical delivery. But what happens when that assumption breaks? What happens when enough people say, I don't want your paper contract, I want the actual metal? That's when you get a short squeeze. That's when prices go parabolic, because there's not enough physical metal to satisfy all those paper claims. We've seen glimpses of this already. Back in 2020, during the pandemic, there were moments where you literally couldn't buy physical silver at any price. The paper price was saying $25, but dealers were out of stock. And when they did have inventory, they were charging $35, $40 an ounce. That's a 50% premium. That's what happens when paper and physical disconnect. And we're seeing signs of that starting to happen again. Premiums are rising. Delivery times are extending. Dealers are having trouble sourcing metal. These are all warning signs that the physical market is getting tight. Now let me talk about what this means for the broader economy. Because precious metals don't exist in a vacuum. They're telling you something about the health of the financial system. When gold is rallying, it's usually because confidence in fiat currency is falling. When silver is rallying, it's usually because industrial demand is strong or investment demand is surging. Right now, we're seeing both metals move together. That's telling you that we've got both monetary concerns and real economy concerns happening simultaneously. The recession indicators are flashing red across the board. The yield curve has been inverted for longer than any time since the early 80s. Leading economic indicators have been negative for months. Credit conditions are tightening. Loan delinquencies are rising. All the classic signs are there. But here's the twist. This isn't going to be a normal recession where the Fed can just cut rates and stimulate the economy back to health. Because we've still got inflation. We've still got supply chain issues. We've still got geopolitical tensions that are disrupting global trade. This is going to be a stagflationary recession, the worst of both worlds. And in that environment, traditional portfolio strategies don't work. Stocks and bonds both get hit. Cash loses purchasing power. Real estate becomes illiquid. The only assets that thrive are the ones that benefit from currency debasement and economic uncertainty, and that's precious metals. I want you to think about the people who saw this coming in the past and positioned accordingly. The people who bought gold in the early 2000s when it was under $300. The people who bought silver when it was under $5. They didn't just make money. They preserved and grew their wealth through one of the most turbulent periods in financial history. And here's the thing. They weren't smarter than everyone else. They weren't lucky. They just paid attention to the same signals we're seeing right now. They understood that when governments spend beyond their means, when central banks print money to finance deficits, when debt levels become unsustainable, the end result is always the same: currency debasement. And the protection against currency debasement is always the same: hard assets, real money, gold and silver. The window to position for this is closing. Not because the opportunity is going away, but because the price is moving. Every day that goes by, every new all-time high in gold, every uptick in silver, that's wealth preservation that's becoming more expensive. And here's what really concerns me. Most people won't act until it's obvious. They'll wait until gold is at $3,000, $4,000, $5,000. They'll wait until silver is at $50, $75, $100. And by then, the easy gains will be gone. They'll still make money, but they'll have missed the most explosive part of the move. The time to act is when it's uncomfortable, when it feels too early, when everyone else is skeptical. That's when the real money is made. That's when you're buying from weak hands and positioning ahead of the crowd. Look at what's happening in the world right now. Wars and rumors of wars, trade tensions, political instability, social unrest. These aren't just headlines. These are the conditions that drive people into safe haven assets. And the ultimate safe haven, the asset that's been money for 5,000 years, is gold. Silver has its own story. It's both a monetary metal and an industrial metal. And right now, both sides of that equation are bullish. The monetary side is bullish because of everything I just talked about. The industrial side is bullish because of the green energy transition. Solar panels use silver. Electric vehicles use silver. 5G infrastructure uses silver. And all of those industries are growing exponentially. So you've got investment demand increasing and industrial demand increasing at the same time. And supply isn't keeping up. That's a recipe for a price explosion. The question isn't whether gold and silver are going higher. The question is how much higher and how fast. And based on everything I'm seeing, based on the historical precedents, based on the current fundamentals, we're looking at moves that are going to shock people. This is your warning. This is your chance to position before the crowd figures it out. Because once everyone sees what's happening, once it becomes consensus, the opportunity will be different. You'll still make money, but you won't make the kind of life-changing returns that come from being early. The history books are going to look back at this moment and talk about the people who saw it coming, the people who understood that the financial system was breaking, the people who protected their wealth while everyone else lost theirs. You have the chance to be one of those people. The information is right in front of you. The signals are clear. The only question is whether you're going to act on it.